I want you to remember something very important. It is your job to absolutely kill it in the bull markets, make tens of thousands, hundreds of thousands, or millions of dollars, and to survive the bear markets. You do that over 10, 20, 30, 40 years, you'll have more money than you ever know what to do with in this game. I got some things I want to talk about in this video here today, okay? Right off the bat, we're going to talk about my Mag 4, what I'm kind of thinking about doing in regards to those stocks, my 4 biggest positions in the public count. From there, I'm looking forward to reacting to this clip. They spoke about what's going on with Oracle stock. I don't know if you guys have seen what's happened with Oracle stock, but basically that baby's round trip the whole massive upward move they have. It's round tripped it right back down. And so this gets into AMD, what's going on there. It gets into NVIDIA, the cloud service providers, and Amazon, and all the other companies. So I thought this was an interesting discussion. I want to go ahead and react to that in this video here today, okay? I'm sure you guys have heard a lot about Michael Burry. Michael Burry went against Palantir, NVIDIA, these sorts of things, okay? I thought we'd spend just a moment talking about Mr. Burry, okay? From there, I'm going to share with you my entire possible buys watch list and share what stocks I'm most excited to buy in the very short term versus maybe waiting a few months on and those sorts of things. So action-packed video, folks. It's busy, I'm busy all the way until Christmas. I appreciate y'all for being here. One thing and one thing only I need from you. If you could please just hit that little thumbs up icon, that would mean the world to me. That's all I need from you. If you could just do that, you're the best, okay? Additionally, thank you everybody that's already done that. And if you haven't subscribed here, you want to see more of my videos in the future, subscribe. We have over 120,000 subscribers here on the channel. I appreciate each and every one of you for being here. Okay, so a lot to get into in this one here today, ladies and gentlemen. My Mag 4. What is my Mag 4? It is Metastock. It is AMD. It is Amazings on Amazon. And it is Palantir. Palantir is crazy because that stock, I have sold like by far and away the majority of my shares, and it's still somehow the 4th biggest position in the public count, which is just ridiculous. And thinking about it now, if I still had all of my Palantir shares, and I didn't take all, because I've sold so many shares this year, if I didn't sell any, Palantir would be close. You know what? No. I think Palantir would actually be the biggest position in the public count right now, which is crazy to think. But yeah, we've always taken a lot of profits, but that one's been insane, right? Now, listen, in regards to this, AMD and Amazon, I've got in Meta. Let's talk about these 3 specifically. Listen, in regards to Amazon, Amazon is a stock I would love to continue to build into a much bigger position than it is right now. Right now, that position size is $379,000. I would love to get it well over $500,000 in regards to Amazon stock here. And the reason being is, everybody's so focused on AWS and how that growth is just accelerated and the AI opportunity there for Amazon over the next 5, 10, 15 years. That's phenomenal. Great. No one is paying attention to the e-commerce business right now. When they have flipped that business into profitability territory, international, and they continue to build that business in North America as well. And I think everybody's losing sight that Amazon's about to push into a massive industry that is going to take Amazon from a service that people, when it comes to e-commerce size, from a service that people are used to using maybe once a week or maybe once or twice a month, into a service that they are consistently using likely multiple times a week. And you know what they're pushing into hard? Grocery. No one's talking about this yet, like in any substantial way, but they're pushing hard into grocery, and I think this is going to be a huge thing for them over the next 5 years. It's been a matter of time before they go hard on grocery, and it seems like we're finally getting to that place. And so I'm expecting their grocery business to absolutely boom over the next 3 to 5 years. That's going to create a bad dynamic for the grocery stores because this will take market share away from the grocery stores. Because Amazon, understand, they have these massive other profitable businesses. They'll be able to undercut competition. Like if they want to undercut Kroger's pricing, they could do that easily. Walmart, who do you want to put? They'll undercut everybody. You know why? Because those other companies, they can't afford to basically go down to whatever Amazon's charging. So if Amazon wants to way undercut the whole grocery industry, they can do that. And so just understand, Amazon's about to become a much stickier app than we've ever seen in any point in its history because, it's one thing for somebody to say, I need to order, a raft for my pool. Let me go to Amazon to order that, right? And they, order something on Amazon every 2-4 weeks. It's another thing if they're used to getting their groceries there. Then they're going on Amazon all the time. And then Amazon has way more opportunities to, guess what? Sell you more things. This is Serious. No one's talking about this. And I'm like, guys, this is like the next big thing for Amazon. Everybody's so tied up in AWS and all that. And I'm like, okay, there's other business people should be paying attention to. AMD. So when it comes to AMD, here's the deal. I posted this on X here today. Not sure if you guys follow me on X. I'll have that linked as the pinned, or not the pinned comment. The pinned comment today will be if you're looking to apply to our private stock group. Keep in mind, we're closing that to new members in December. So if you want to join my private stock group, you should get in there ASAP. That will be the pinned comment down there. Access to all my course curriculums, teaching you everything I got up here. Access to the Discord chat, the moves I'm making each week, all that good stuff, pinned comment. Down there. So also in the description area, I always have my X link down there. I said there's 35 trading days left in 2025. AMD 300 is possible if the market keeps its cool. And yeah, I gotta say, ladies and gentlemen, I really do think AMD has a potential to get to 300, but the market can't go down a bunch. Like if the market, if let's say between now and year end, the market dropped 10% like that, good luck to AMD getting to 300. That's just like put it like this. It's like swimming against the ocean and the waves are like coming straight against you, right? Yeah, it's possible, but it's not going to be too dang easy when you got massive waves coming at you and you're trying to swim against those waves, right? And so if the market can just be like flat or even uptrend between now and year end, I would not be shocked at all if AMD gets to 300 plus. I don't know if you guys heard the growth rates Lisa Su was talking about in regards to the investor presentation and whatnot, right? And I posted this. So Lisa Su's talking about 35% CAGR for the next 3 to 5 years when it comes to revenue, right? Now, we know Lisa Su likely sandbags. So I just ran some math here. I said AMD should get to $150 billion in revenue in the next 5 years. AMD should get to $50 billion of net income in the next 5 years. At a 20 PE, that's a $1 trillion market cap. For AMD at a 30 PE, that's a $1.5 trillion market cap. AMD's market cap currently, that was as of yesterday, $386 billion. AMD has serious 3x to 4x potential over the next 5 years. Now you might say, okay, what if they only get to $120 billion of revenue, which would be $30 billion shy? That's a big number, right? Even then, you could still make an argument that they might be able to get to $50 billion in net income because their margins are going to increase so dramatically over the next few years. But then you can say, okay, maybe $40 billion, do your math, still AMD's a banger stock, even under that sort of scenario, right? You could also say, what if Lisa Su's sandbagging a bit here and AMD actually gets to $200 billion of revenue over the next 5 years or whatever? Like that's something you have to consider as well. So whichever way you want to look at it, like AMD's still a huge buy even after this massive run, and we've done phenomenal in the stock. Now up 376,000 the public count. I have a massive position in one of my private portfolios as well, and it has more upside ahead, man. More upside ahead in regards to that one. Meta's a sticky situation right now. Meta's a sticky situation. The revenue growth is insane at Meta. 26% in the latest quarter. Who's doing that in Mag 7 other than NVIDIA? No one. Great numbers. Meta's going to keep putting up great numbers, right? But Zuckerberg has really increased that spend. People are worried that he's going off the rails again. It won't be the first time. And that is causing a concern around Meta stock, the return on investment, and they're having to face a lot of tough questions that Zuckerberg doesn't have the answer to right now. I listened to that conference call at Meta, right? There were some questions he got asked about what margins will be looking like for some of these businesses and how big they could be and things like that, and he didn't have great answers. And that's kind of what you would expect, though, unfortunately, out of an innovator like that, right? You're trying to build new businesses and do new things and do big things. Like Zuckerberg's just focused on, like, we're going to build something massive here. My focus as a long-term investor is not getting caught up in the short-term spend. I trust Zuckerberg. He built Facebook. He acquired Instagram for $1 billion, one of the best acquisitions in business history. He acquired WhatsApp for $19 billion, a steal deal, right? He's building out Threads right now. He's been able to successfully copy so many competitors' features, whether it be Snapchat and, caused a lot of problems there, TikTok. Like, they just got it over there. And so I understand there's a lot of questions about the spend, but also look at the revenue growth you're getting at this company. What if Meta is going to get, we don't know where Meta's revenue growth is going to stop at in terms of the acceleration. What if they get to 30% revenue growth, and what if they keep that? Has anybody considered that? Like, these are things to also consider in regards to Meta. So Meta remains a buy. It's a steal deal buy. Is their stock price going to go up in the next 6 to 9 months? I don't know. Like, would I be shocked if Meta stock was still $600 6 to 9 months from now? I wouldn't be shocked, because at the end of the day, like, if the big money Wall Streeters are confused about the spend, they won't buy the stock. And if they don't buy the stock can't go up. It's as simple as that, right? If the Wall Streeters can get a little more clarity, let's say Meta comes in with another great revenue growth the next quarter, and Wall Streeters start to understand a little bit more about the spend and what's going on there, Meta will explode to new all-time highs, and next thing you know, you'll see the stock at 800, 900. I do think Meta stock next year will be $1,000 at some point in time. So that is my belief. So we'll see what happens in regards to that. Okay, let's go ahead. I want to react to this piece around Oracle here, because I think this is really important. It's not just around Oracle. It's around AMD, NVIDIA. The whole AI movement right now in these sorts of things is really important.
It's still coming. I mean, the whole space, they've already pledged that they're going to increase spending next year. That is going to be funded by debt primarily.
Yeah. So, well, they don't have the cash flow problem at the moment. That's not where they are. But, you know, when they talked about that enormous backlog build, the margins on that backlog were much smaller. And now they're likely to have higher interest expense, right? For two reasons. One, just the magnitude of how much debt they want to sell, and others as well, so that market could get saturated. And then some concerns about, okay, well, what is the promise of this data center return? And so do we debt holders need more interest?
Right.
So you can see how you get into this sort of negative spiral there. I don't know how much of it to make is just a little bit of like a frenzy right now. My gut is that it's more structural than that. It is a bigger problem. Even while we're talking about this just today, right? We saw huge deals. It's almost like a race to just get your headline number out there. I don't know if that's to get a position in line for debt. I'm not quite sure what that is, but when you look at Meta's response, the stock's response to that build, that's, as a shareholder, very, very frustrating. I think if we were to see the year of efficiency next year, I know that's not Mark Zuckerberg's plan at all.
Right.
But that would be very nice for the stock.
2.0 would be probably pretty good. What does that chart look like, Oracle, the decline?
I mean, we can talk about the chart for a second, but I think the real thing is, if one were sitting there and they were just graduating with their PhD in finance and they had to present themselves in front of the committee, and the committee said, well, you've made an analysis on Oracle. And they said, yes. Did you use a dividend discount model? Did you use enterprise value EBITDA? Did you price the sales? Some of the parts. How does anyone explain, myself included, how a stock can go from 250 to 350 back to 250 in a matter of weeks? Is anything changed? The debt's not new. The story's not new. Just because it's in the news, there might be some issue with margins. They're overstating this. But this speaks to the vagaries of markets. These are risk assets, right? Now the question is, but here, and to your question, do you buy this 35% sell-off? My hunch is that just as it was in favor, now it's so almost out of favor that I think you can play it for a bounce.
Oh, so bad it's good in this case.
Well, it's an extreme move. You've retraced the whole thing. And again, that's a trading judgment. I can't speak to it, and I would never want to, because clearly no one else can, what this thing's worth, right? No one has a clue.
Yeah. Julie, what's your...
So Carter, generally, I'm not in love with his takes because he's a technical guy. He's like looking at the trend lines, and this is technical, blah, blah, blah. But he makes a great point in regards to Oracle. No one can properly value this thing right now, including even myself. I've been running valuations for 17 years. I can't run numbers on Oracle right now because I honestly have no clue what their actual revenue growth is going to be looking like over the next 3 to 5 years. I can run likely probabilities on Meta stock, on AMD stock, on Amazon stock over the next 4 years, and what their likely revenue growth will be around. Oracle, I just can't do it. Like, there's one side of me I could see Oracle growing at like 10% revenues. Another side of me could see Oracle growing revenues at like 20%. Another side of me the numbers are so dramatic. Like, they could do a 30% number. The numbers are so dramatic. Like, it's ridiculous. The margins, I have no clue what their actual margins are going to be. They're talking about these margins might actually be really bad in this business. So they talk about some of it might be loss leader type stuff. That is like, I don't know how to, like, you can't run numbers on Oracle right now. What's the profitability of this going to be? They're taking out supposedly massive amounts of debt that they're going to have to pay interest on. So they're going to have a huge interest expense. The company already has an insane debt load on this company. It is like Oracle. One side of me is like, I would like to buy that stock. The other side of me is like, that's a mess. I don't like, how can you accurately run numbers? At some point in time, you might be able to, and maybe that's the moment. Like if I could ever actually run numbers and have confidence that like this is a roughly, I could probably buy Oracle stock. But until that happens, or until their balance sheet gets clean, the other problem is their balance sheet's a mess, and it might get a lot messier. Tough in regards to that one. And that's very different than Meta. Meta, you can say, okay, yeah, they're spending like insane. Zuckerberg's back to spending like a drunken sailor when it comes to CapEx. But you know roughly, Meta's going to likely be growing revenues 15 to 22% a year over the next, 4 years. That's highly probable, highly probable. Somewhere in there roughly. Maybe a great scenario, they push up to 23 or 24% revenue growth on average the next 4 years. Okay, somewhere in there roughly. You can then run your net income projections at a little bit better than that, right? Net margins increase. Like you can run a realistic scenario. Same thing with Amazon. Same thing with AMD. Oracle, you just can't do that. No one can really do that right now, and that's why this stock is round trip. Because people were so excited when they heard the deal, right? Oh my gosh, like OpenAI and the Oracle deal, that was so exciting. But now people are like, we don't even know what this means in regards to the numbers.
Take on this, and if we can put up the chart that shows the decline in valuations. I mean, Oracle's valuation is down 30% from its peak of 45 times. It's 32 right now. I don't know if you think that is worth a play for the bounce, as Carter says.
It still feels a little bit rich for me relative to what we can see is that there's just a precipitous decline in the returns on investment that people can expect. Everyone can kind of recognize that Oracle is not the same type of business as a lean software business. What I think really has changed and has impacted all of these players is just this transition away from we're going to fund this with cash flows, which everyone felt fine. But suddenly when we're talking about debt,
yes,
and we're doing secret debt with special purpose vehicles, like what happened with Meta, I think suddenly that really, really changes the dialogue. And then it gets only a little bit worse when you have OpenAI CFO asking for a backstop on their debt, like asking your dad to co-sign your loan on your first condo. Like, that's just not how this works. And I just think that that has really spooked the market because we can all recognize that the minute debt gets involved, that accelerates the declines if they happen.
I mean, there have been a couple of major shifts for this sector. I mean, Julie touched on one of them, and that is funding spend with debt versus cash flow. And the other one is just the model turning from asset light to asset heavy. And how do you account for the depreciation of?
This is an important gem I'm about to drop here, okay, in regards to debt, how it works with stocks. Okay, listen. If you have a proven thing you're doing and you take out debt, investors can understand that. So let's say I have a very successful let me use an actual real life stock example of a stock I personally own. Cheesecake Factory, okay? Cheesecake Factory has two concepts. They're going to expand all over the United States over the next 5-7 years, right? One is Flower Child, the other is North Italia. They're going to be able to build massive amounts of these locations. We know those locations are phenomenal and very profitable. So if Cheesecake goes ahead and takes out debt, right, and has to pay 5-6% interest rate, whatever, on that debt, right? We're all fine with that. Because we know they're going to build all those locations and they're going to make tons of money because it's been proven. Now, where you have a problem is when you're a company and you're going to spend on this technology that's unproven. No one knows if it's going to be profitable. If it's going to be profitable, how profitable, what are the margins going to be, what's the actual revenue growth rate. No one knows anything. That is what starts to scare people. And that's what's going on with some of these companies now, where they're taking out debt to build these facilities that we don't even know if they're going to make money, how much they're going to make money. Like, that's an issue. Because now you're just talking about, you're just having faith. Like, I just hope it works out. Versus like, this is proven, we're doing this, okay. That's where we're running into issues in regards to this whole AI movement now at this point in time.
This build out, I mean, these are major questions, fundamental changes to how we would view these stocks.
Yeah, we've talked about that as well. Michael Burry's written about that too. A lot of people have been talking about it now in terms of what's the right depreciation schedule for this industry sector, whatever you want to call it. Now, they're going from...
Oh, shoot. Oh, boy. Okay, so that's in a whole other can of worms. Oh, no. Oh, no. Okay, so we're going to go even higher level here, okay? Depreciation. Listen, these companies are spending fortunes of money on all these AMD chips and these racks and everything that they got going on there, right? These companies are going to have to depreciate all that over time, which that depreciation is going to hit their earnings substantially. Now, you could value these companies on EBITDA, metric, earnings before interest, taxes, depreciation, amortization, but a lot of people don't, right? You might look at the net income. So that depreciation of all these chips and all this equipment, it's going to hit hard, really hard. Because remember, these companies are spending tens of billions of dollars on this stuff. So you're going to have a wave, a tsunami of depreciation coming over the coming years. And all of a sudden, you're going to start to look like resort companies. Like I own a company, Wynn Resorts. They always have massive depreciation, right? Always massive depreciation, like because they run resorts and like that's a real estate business. Like you have huge depreciation. Well, all these companies spend fortunes of money on all this equipment, all these chips, massive depreciation come. That hits your earnings. And then you might not be able to command as high of a valuation because, that PE, that's a fair point.
A 6 to 8 year depreciation schedule, but you go back and look at some of the comments out of some of the CEOs, and quite frankly, in my opinion, there should be like an 8 to 12 month depreciation schedule if you really look at it and examine how quickly things turning now. So that changes the entire narrative. In terms of the debt raising, that's one of those things, Karen can speak to this. Nobody cares about this stuff until they begin to care about it, right? It's great on the way up, the same way, buying Bitcoin every day and creating the treasury strategy works. But when things turn, everybody starts pulling the microscope out, and that's when things get a little dicey.
Yeah, we've seen spreads widen, right?
We've seen spreads
and
widen.
CDS.
So, right, exactly. They don't care about it until they care about it. So if you can raise debt for free, and a lot of companies could raise debt for free, then you've got a nice, then a lot of models work that wouldn't work otherwise. But then you get into the vicious cycle of debt being more and more expensive and the project being less and less profitable. So that's not a great place to be. I think the Oracle move, I also think it is just...
Yeah, it's a nasty double whammy, ladies and gentlemen. It's a nasty double whammy because you have the depreciation hit, which is going to hurt your profitability substantially, right? Even though depreciation is kind of a non-cash expense, it's still going to, because you already spent the money. Like, it's not, like these companies already spent all the money on the chips. So it's not like when you depreciate, like you lost a bunch of money, like you already spent the fortunes of money anyways, right? But that hits your profitability. And then if you're taking on a bunch of debt and you got to pay a bunch of interest, you got a massive interest expense line item, which also, guess what? Hits your profitability as well. Then if you're also spending down your cash balance on all of this, well, that cash balance then can generate you a bunch of returns in interest income because you have it in treasury. So that's a triple whammy. Whew. So, you see these stocks pulling back right now, a lot of these big techs, and it's not like it's for no reason. It's actually for good reason because there's several, problems emerging here. And unless you're a company that's going to be able to grow at a rapid clip, you're not going to be able to justify to spend all the depreciation and then all the interest you have to pay on the debt.
A proxy for sentiment about the entire space, whether or not you have anything particular on Oracle or not, huge liquid debt, CDS swaps, there's tons to do. And this is sort of just tells you how the market feels about that much debt.
For more on Oracle and the pullback in the AI trade, let's bring in D.A. Davidson, Head of Technology Research, Gil Loria. Gil, great to have you with us. I know you were listening in to our conversation. I mean, in your view, is Oracle some sort of a canary in the coal mine? I mean, is this sort of the cautionary tale that a lot of these other players will fall to in terms of, the optimism fading away, the concern about the debt levels growing, et cetera?
It's a cautionary tale in the sense that they represent the bad behavior in the AI build-out. Oracle and CoreWeave are the bad behavior. Microsoft, Amazon, and Google have all the customers, have cash on hand, and have tremendous cash flow. So when they build a data center, it's already sold 3 years in advance. And they just told us 2 weeks ago that just over the last 90 days, they've seen a positive inflection point in demand for AI from their customers, which is everybody. So that's healthy, responsible investment. The irresponsible investment, as you've been talking about, is when you start borrowing to provide capacity for startups. And that's what Oracle did. Oracle originally told us on their earnings, we just won $300 billion of backlog from several companies. The next day, we found out it was only OpenAI. Then we subsequently found out that OpenAI has committed $1.4 trillion and has no intention of living up to those obligations. It considers it a flexible arrangement that they can consume as much as they want. So they commit 250 to Microsoft and 38 to Amazon and 25 to CoreWeave, and they'll spend what they feel like. So we know that it's not real demand. And then we found out that Oracle's margins on this business are so much lower than the core business that we're not sure that we want them to grow this business. They said 30-40% gross margins on this business as if that's a good thing. Their core business is 80% gross margins. This is a bad business with very low margins when you don't have the customers, which they don't. All they can do is resell this capacity back to the people that do have the demand, which is Microsoft, Amazon, and Google.
So at 227, we've basically done a full round trip in terms of the gains that Oracle made on all the optimism and then fallen back. Are we at a level here that's sort of as stable, or should we look at Oracle differently because of the way they manage the message?
It's more stable at 32 times earnings than it was at 45 times earnings. Because let's not forget, the core business...
Should it be lower because of what they told us, which didn't come to fruition?
Yes. Yes. We should definitely keep everything they say from now on with a little more grain of salt, just because of how this all transpired. But Oracle itself has a core business that grows 5%, that is very profitable. It does have a cloud business that's growing. Let's forget about the OpenAI false promises. Their core business in cloud is growing. They have good customers there like ByteDance. They may end up owning a piece of TikTok USA. Those are reasons to get excited about Oracle beyond the core business. But OpenAI and that $100 a stock in Oracle stock of appreciation, it makes a lot of sense that that's completely gone away now.
Yep, Gil, listen, absolutely. I think you're right. Their cloud business, probably low to mid-margin stuff. So, maybe it's not deserving of the multiple. So how do you back of the envelope do it? I look at this and say $8 next year, a 25 multiple is historically probably about right. It gives it a $200 stock. That's where I think the value should be found in Oracle.
That's right. When we get back to the 20s or the mid-20s, it could become interesting. Right now at 32, it's not cheap. It is still getting credit for the cloud business doing better. And again, part of the cloud business is a good business. The part where the traditional hyperscaler business, where their big customers are companies like Zoom or ByteDance, that's a fine business. It's not as good as the core business, but that's a fine business. The renting out GPU business, if they have a positive margin at all, it's very, very low.
Gil, it's Karen. Thanks for being on. What do you think it would take for any of these companies to tap the brakes?
I think OpenAI there's going to be a reckoning around OpenAI where they have to either make firm commitments to capacity or walk away. So there's going to be a lot of renegotiating of that $1.4 trillion they've committed to. There's maybe tens of billions of real demand they have over the next couple of years. So they're going to have to go around to all these companies, Amazon, Microsoft, Oracle, and CoreWeave, and say, this is the actual demand that we can pay for next year based on how much money we've raised. And once we have that, all these companies are going to have to come back to us and tell us, here's how much we have to adjust down our backlog. This is real. And once we know that it's real, we'll have a better sense for what the business is. But a lot of this has been caused by OpenAI inflating expectations across a broad set of companies. It's not just CoreWeave and Oracle. It's also companies like AMD and Broadcom where a lot of that valuation has to do with promises from OpenAI. AMD yesterday at their analyst day talked about these phenomenal growth rates over the next few years. We don't know how much of that is OpenAI committing to volumes there based on now owning 10% of AMD. Maybe it's the biggest part of growth there.
Whoa. Hold your horses, sir. Hold your horses. Just one flip and flapjacking moment, sir. OpenAI does not own 10% of AMD yet. In order for OpenAI to own 10% of AMD, OpenAI has to buy a ridiculous amount of AMD chips over the next several years, starting in the back half of next year in 2026. So that's important to understand. It's not like AMD's just like, here's 10%, or AMD's, here's 10% OpenAI of our company. Like, no, there's a bunch of purchase commitments that have to happen. If OpenAI makes those massive purchase commitments over the next several years, then AMD will then give 10% of their company roughly to OpenAI. So just keep that in mind. And obviously, if OpenAI makes all those orders, like to AMD, like AMD is going to be glad they did that deal, because that's massive. And obviously, AMD's already got great branding because of this deal. The fact that, OpenAI, I don't want to say he's going all in the 450 series, but with how serious they're taking it, now that basically gives a sign to every single company that's in this space that the 450 series, you have to have that from AMD. And it seems like every big tech's going to want that 450
series. Just like it was the biggest part of growth in Oracle. We have to get OpenAI to tell us what they actually have, how much money they've actually raised, how much money they can actually spend next year, and have all these other companies take out their backlog that's not real.
Gil, thank you. Great to see you. Gil Loria, D.A. Davidson. Let's assume that we're not going to get OpenAI to reveal all these things, because I think that's a fair bet. Julie Beal, if there's some sort of reckoning, as Gil put it, where in the Mag 7 would you want to be?
I think probably I would want to be positioned with Meta. I think Meta is the one that has the best positioning in terms of being able to leverage AI to make their own business singularly great. So I think having that ability to kind of eat your own AI and make your business that much stronger is kind of particularly unique about Meta. And I think that positioning is really not really reflected in the valuation.
All right. Meantime, let's get to shares of IBM. They hit an all-time high today. The company.
One thing I really like about the move here in Meta, right? Other than obviously it's created a tremendous buying opportunity for people that are looking to buy Meta stock. But the one thing I really like in regards to this move is I like that the market is, I don't want to say trying to nip this in the bud in regards to what Zuckerberg's doing here, but I really like that they're sending a clear signal that Zuckerberg, you need to explain better to us what all this money's going to, because people are confused. They're like, okay, like revenue's increasing, you're showing more, relevant content to people to keep them on the service more often, and you're, obviously doing a great job with having companies get a more positive ROI on their investment in regards to showing ads. Great. But does that really take this much money you're spending? So what is all this money actually going to, right? Is it to the llama models? Because we don't even know if those are going to be super successful. So why are we spending such a crazy amount on those, right? So I think there's going to be a lot of questions that Zuckerberg needs to answer in the next several months to explain, here's why we're spending tens of billions of dollars like it's nobody's business on this, and here's why it's going to be worth it in the end. But they're sending a clear signal that Zuck, come on, man. And it's very important these stock prices go up over time. Not just so Zuckerberg can say, I'm richer than ever. No. It's really important for the employee standpoint. If your stock price is not doing well, as a company like Meta, you're much more likely to lose top talent to other tech companies. If your stock price is doing very well, much higher probability you're going to be able to attract more top-tier talent to your tech company, essentially, right? And Zuckerberg's also been on a spending spree when it comes to talent at Meta over the past year as well. So there's a lot of questions around that and what those employees are going to bring to the table. So Zuckerberg's got a lot of explaining to do between now and the next earnings, essentially. A lot of explaining to do. If he can explain it and people can start to wrap their head around, okay, I get it, then we can talk about that stock starts to move back up again, okay? Now, Michael Burry, he's obviously been in the news here, right? And this was interesting. Michael Burry is arguably the worst investor of our generation. This person posts on X, right? So here they post that Burry said in January 2016 he predicted a global financial collapse in WW3 are imminent. September 2019 claimed index funds were the next CDOs ready to implode like 2008. And obviously the market's gone up dramatically since September 2019. December 2020 shorted Tesla and said that the price was ridiculous, destined to crash. 2021 reiterated that Tesla's valuation would implode soon. Shares kept doubling. January 2021 late, argued GameStop rally wouldn't repeat and imploded again weeks later. It exploded again a few weeks later. I mean, to be fair, Burry was just a little early on those, because at the end of the day, GameStop did obviously that ended up in tears in the end in regards to GameStop. And Tesla, don't forget, Tesla stock topped end of 2021, and by the bottom in 2022, beginning of 2023, that stock went down 70%. So I understand this person's like his timing was off, but he actually ended up being right in the end. So just do keep that in mind. He was off by months, I guess you can say, or roughly a year. Actually, less than a year, months. February 2021, warned the entire stock market was dancing on knife's edge. I mean, fair argument to make at that particular time. There was a lot of spec stocks, and a lot of spec stocks actually peaked February 2021. The market itself didn't peak till November 2021. That was a fair thing. Once again, his timing wasn't perfect, but it was fair. February 2021 claimed inflation would destroy Bitcoin. It hit new highs later that year. Listen. Bitcoin crashed like 75%. Peak 2021 to lows 2022. So once again, his timing might not have been perfect there, but like the call ended up being pretty dang close. Bitcoin topped. Look at Bitcoin. It topped in that fourth quarter, and by the lows, it was down 70+%. So February 2021 called Robinhood a dangerous casino. It kept growing. Dude, Robinhood crashed like 80%. Like literally, Robinhood stock crashed like 85%. From the highs it hit in 2021 to the lows it hit in 2022, Robinhood stock was down like 80 to 85%. You can look it up. So once again, like his timing might not have been perfect, obviously, but he was pretty dang close on some of these. March 2021 said Bitcoin was a speculative bubble. It kept rallying. Yeah, and then it crashed 70+%. June 2021 predicted the mother of all crashes and sold everything. Market kept going. Yeah, but at the end of the day, that market did end up topping November 2021, and then we went through a Nasdaq 38% drawdown, 37% drawdown. September 2022 forecasted massive stock failures ahead. Indexes finished the year higher. Yeah, that one was definitely off, right? Obviously, we've been in a bull market since then. August 2023, bet $1.6 billion on total market crash, tweeted sell, later admitted. I was wrong to say sell. Yeah. So the moral of the story is here in regards to Michael Burry, okay, is this man obviously made a big call back in the great financial crisis, right? He had a whole movie made about him and his crew and all that stuff, right? The Big Short. Cool. Because you get one big call right does not mean, you should be looked at as a hero forever in the financial space, right? When I got in the market, right, I found Buffett. And one of the things that really attracted me to Buffett wasn't just his principles, way he was teaching, how he would explain things, but Buffett had decades of success, right? It wasn't like he just had one thing that he was known for and it was like, oh, Buffett, he got this one stock right or something like that. It was like he had a multitude of businesses, a multitude of successful stocks, incredible, Berkshire Hathaway stock did, like 20% a year for decades and decades and decades. So there was something to look at there and be like, this guy knows what's going on, right? Michael Burry, yeah, he made that one big call and he made a fortune from that, but he's gotten a lot of stuff wrong over the years. Some things he ends up being right on, and then, even with NVIDIA and Palantir, he might not get his timing perfect in regards to that. But would I be shocked if Palantir fell to $100, at some point in the next year or two? That wouldn't surprise me at all. Have you seen the stock's PE ratios? Like, it's insane, right? NVIDIA, let's say at some point in time in the next year, there's cracks in OpenAI or something. Could NVIDIA go down 50%? Sure. If all of a sudden that revenue growth dries up in 2027 for NVIDIA, it's going to be ugly, right? And that stock will get absolutely obliterated. And so is his timing going to be perfect in regards to Palantir or NVIDIA? It might not be. But could he end up being right in the end? He might be, right? And that doesn't mean the end of NVIDIA. That doesn't mean the end of Palantir. No different than his Bitcoin call. He wasn't perfect in regards to that, but then Bitcoin ended up falling like 75%, shortly after that. And that also didn't mean the end of Bitcoin, right? It just meant it had to go through a massive crash. As Robinhood, Robinhood's, now at new all-time highs, way higher than it was even in 2021. But people forget, like Robinhood stock crashed 80+% from those 2021 highs to where the lows were at for that stock. I think from highs to lows, I honestly think Hood might have fell 90%, guys. Okay. And so, sometimes people sometimes people like post this stuff on social media, but I'm like, dang, dude, like you got to do a little more, oh my gosh, research here. Oh my gosh, my trading view just got all messed up. Lead page. Hold on. Let me go to my other trading view. I don't usually use trading view like this. I usually use it on this, but we gotta see this. I think Hood, I honestly think, and then we'll get to my buys, watch list, and all that good stuff. I think Hood, I was just taking a peek at Kava earlier today. I was doing a little work on Kava. So let's pull up a 1 year here. Let's go back. So those highs it reached highs of at least 70 something. It might have even been higher than that, right? And the lows Hood got down to was $8 there, $6 here. Ladies and gentlemen, if you have a stock that is 70 something dollars and it goes to $6, that is over 90% downside. Over 90%. So, like Burry, I mean, that call on Hood, it was right? Long term, it was not a good call to make, but so anyways, the moral of the story is in regards to somebody like Burry, like he makes a lot of calls, some aged very poorly, some aged really well. It depends. And the thing you understand is he's looking for short-term things to happen. Even his call on the housing market, right? If you look at it over the long term, not the right call to make. But he made a fortune on it in the short term. He made a fortune on it. Good for him. But at the end of the day, like real estate is massively more expensive today than it was back then. So, any of these things like Robinhood, Bitcoin, they're massively higher today than they were when he was making those calls, right? Even Tesla, even Tesla's higher than it was back when he was making those calls. So, he can be wrong in the very short term, then right in the medium term, and then wrong in the long term. So that's just something to keep in mind there, right? And that's why I don't play that game, man. It's such a messy game to play, and you're trying to get with him, I'm sure he raises a ton of money, right? So it's no big deal. But you understand, when I go to invest, I'm investing my own money that I've worked hard for over the last 17, 18 years. And so I'm not trying to gamble on when this stock might go down. I'll place a hedge for my portfolio, a small hedge, but I'm not going to go gamble millions of dollars on this stock's going to go down in the next 6 months and 9 months and 3 months and this stock's going to implode. Oh my gosh. Talk about stressful. Not worth it, ladies and gentlemen. Not worth it. There's too much money to be made on upside in the market over time, right? Remember this. Always remember this, okay? If you look at the market in general, you're going to have usually 2 out of 10 years are going to absolutely suck. If you're long the market, 2 out of 10 years are going to absolutely suck. You're going to get tore up. 1 out of those 10 years, you're going to be like, what happened? Like nothing happened. Like I didn't lose money, I didn't make money. Like this was just a boring year. Like we just did a kangaroo. And then 7 years are likely going to be good years, right? And you could say, if you want to split that 7 years, you can say 2 years are going to be unbelievable, where you're like, can't believe how much money you made. And the other 5 years are going to be like, we did well this year, right? That's the stock market. And so play from the long side, right? If you want to hedge every once in a while, you can hedge. You got a big dog portfolio, something like that. Okay. Alrighty, so my possible buys watch list. What stocks am I most interested in buying? So if we look here, if I just look at this list, I'm like, what one excites me the most out of everything? Two catch my eye. Cake, first one. Cake, I just love because the valuation is just so darn cheap, and they just have so much growth ahead for that company over the next 5-10 years. So Cake definitely captures my eye. The other one that really captures my eye is right here, Amazon, Amazingzon. Like that one I just think is a steal deal still at this point in time. So both of those definitely capture my eye. Honestly, I should add Meta onto this possible buys watch list. Like the thing with me is I have so much invested in Meta, but gosh, it is so dirt cheap right now. Like Meta, we're looking at like the 2-year forward P on Meta is under 20 right now, likely, and probably significantly under 20. And so I'm just like, and they just grew revenue 26%. If you're talking about 2-year forward Ps is in the teens right now, in my opinion. The 2-year forward P for Meta is in the teens. And they're growing revenue in the mid-20s? Like, gosh. Meta's actually a better buy right now than Amazon. I'm more interested in buying Amazon just because I have so many Meta shares already, right? And I don't want to get too overexposed to a stock I'm probably already too overexposed to. But, like, Meta's the best buy. It really is. It's the best buy out of everything in the Mag 7 right now. But those two stocks definitely capture my eye. ELF captures my eye as well. When it comes to ELF on a shelf there, that one's just an extraordinary opportunity. Have you guys seen my projections on ELF? We're looking at 1000xstocks.com right now, which is something you get access to nowadays when you join my private stock group, which was a pinned comment down there to join us before we go ahead and stop allowing new members next month. So let's go ahead and take a peek at ELF on a shelf. So here are my ELF projections. Alrighty, so my ELF projections here, this is my bull case. Bull case gives me a compounded annual growth rate of, let's call it mid-20s to low 30, right? Base case, this was a really conservative base case I put together here with ELF, right? Like, really conservative. And in this insanely conservative base case, like, I'm still getting likely a double-digit CAGR here, right? Bear case, it could go ugly in that sort of situation. But, like, ELF is still a buy. It's still a buy, and if the tariff thing got removed, like, oh boy, like, could that really boost up that business? I'm probably low on all my projections on ELF. I just really want to go super conservative with ELF because remember, ELF missed revenue 2 straight quarters. So right now I'm being super conservative with all my projections around ELF. There's a high probability that these projections I have on ELF right now are way too low. So do keep that in mind. I just rather, being that they missed revenue 2 straight quarters, rather go really conservative there, right? Celsius, I don't know if I have my projections saved for Celsius yet. Let me see. Oh, maybe I do. Let's see. These might be old projections I have for Celsius. Yeah, these might be old. Oh, yeah, these are like ancient projections. I think this might have been before the Alani deal or something like that. I need to fully redo those projections for Celsius. Next time I'll probably fully redo those tonight, and then I'll likely end up sharing those guys with you eventually. Okay. Bath and Body Works. I actually like Bath and Body Works right now. Nike, obviously, everybody knows how I feel about Nike. Like easy peasy, lemon squeezy money. Same thing with Estee Lauder. Adobe, excited about that one, but not super excited. Whirlpool down to 66. Like, gosh, man. Whirlpool's just calling my name. It really is. It really is just calling my name. Like, I really think we're troughing right now in regards to the housing market. I think the housing market starts to come back to life next year in 2026. And I think the housing market builds on that in 27 and 28. And we get out of this funk of like no one's moving. And once we get out of that funk, I think Whirlpool's going to do phenomenal. So, but gosh, the problem is there's so many stocks I want my money right now. American Express, loved that one. Spoke very in depth on American Express in the main channel recently. CRM, really like CRM here. PayPal, I think, is one of the best stocks out there right now. PayPal, let me load my projections for PayPal because the PayPal projections are somewhat recent here. Okay. So here are my PayPal projections. Look at the CAGRs we're talking on this. Under my bull case for PayPal, 9% revenues, 11% net income growth a year. We're talking CAGRs of 24 to 31%. On my base case, 18 to 26% CAGRs here for this baby. So, yeah. PayPal. It's a great buy. I know the stock has sucked for years. I understand. I get it. But what happened in the stock's past is irrelevant. Cava, I've been looking at that one, been thinking more about Cava in regards to this one. I don't think I have projections yet for Cava. I do not believe I have them, but let's take a peek. Cava, I do. Never know what I got in these projections. So Cava here, that bulk, shoot. Cava? Might have to I have to look at these numbers again. Maybe I was feeling a little too good when I ran these numbers. I don't know. Like, I'm going to have to relook into this. I don't know about that. Okay, I'm skeptical. I'm skeptical of my own numbers in regards to CAFA. I'm looking here and I'm like, I don't know about that. Was that Burry? I don't know. I'm going to have to relook at my numbers in regards to CAFA, okay? I don't know. Maybe I was up at 3 a.m. running numbers one night, and I don't know about that, okay? Google McDougal. I believe I have numbers in regards to Google McDougal here. Let's see my Google numbers. So, Google. Yeah, Google's still a solid buy. It's not like the most intense, like, oh my gosh, we're going to make a fortune on Google. But it is still a buy. It's not as good of a buy as Meta. Let's just be honest. Like, if you got to buy one of these stocks, like Meta's clearly, in my opinion, the better buy at this point in time than Google McDougal. I like Google McDougal. It's going to likely return double-digit percentage over the next 4 years, right, per year. But there's a better buy out there, and its name is Meta, right? And I can make a strong argument that Amazon's a better buy as well. Do I have Amazon numbers ready to rock and roll here? Oh, wait a minute. I have two different Amazons. Let me see here. I don't know why I have two different Amazon projections here. This one had 14. Let me see. This one had 14 and 12. Huh. Let me see these Amazons. I don't know why I have two different projections. And this one has 14 and 12. What in the world? What in the world is going on here? Do I have two Amazon projections that are the exact same? I'm so confused right now. It's the same thing. Anyways, in regards to Amazon here, this is clearly, in my opinion, a better returning stock. Like, you look at my base case for Amazon versus my base case of Google, I had around 11 and 17% CAGR. With Amazon, we're talking about low end is 17. High end might be 21% CAGR here for my base case. 12% revenue growth, not a crazy number. 18% net income growth, 33 to 38 PE. And we're talking about, a significant CAGR here in regards to Amazon. So Amazon, a better buy than Google. Meta, a better buy than Amazon is a way I would put it, right? RH, that is one that I'm interested to see what their earnings are looking like for RH. I'm not ready to step in RH yet. I want to see what those earnings look like. Their earnings will likely come out in December, I believe. So when their earnings come out, I'll then figure out, do I want to make a move on RH in 26 or do I not, right? There's 3 stocks that I look at on this. There's actually 4 stocks I look at on this list. And I'm like, do I want to make a move on these stocks in 2026? One is RH, one is Whirlpool, one is Cava, and the other is Bath and Body Works. Those 4 stocks I'm trying to figure out, like, do I want to make a move? Do I not? In regards to those 4, okay? Alrighty, guys, that was a beast of a video. I appreciate you joining me as always. Thank you so much for being here. Once again, if you're looking to join my private stock group, private wealth group, get access to all that good stuff, there'll be the pinned comment down there. Join us in there before we stop allowing new members, which is next month, okay? Alrighty, guys, much love and have a great day.